that music means we have started what is becoming one of my favorite hours of my work week. Welcome to Trade Masters out there. Trade Masters has been very popular in our community, and we are going to be doing it for years and years and years to come. It is a great show, and if you're new to Trade Masters for the first time, it is a very simple concept. Two experienced traders bring their best picks, and these picks can be swing picks, swing trading picks, long-term investing ideas, short-term cash flow plays. It can be just about anything you can imagine. And those picks are then judged by yours truly. And at the end of the show, one of the experienced traders, unfortunately, I can't name them all. There can only be one. This is Highlander rules, is named the winner. And we are joined by last week's champ, Mr. Greg Holmes, from north of the border. Why do I always have to associate Canada? Why can't I just say Greg Old Money Holmes? Why do I always have to say from Canada, Greg? Why is that?
Everybody loves Canada, and then Canada loves everybody.
It's like a thing of affection, right? You know, it's like calling you doctor, right? It's like a term of affection and respect. And stepping into the ring for the first time is the challenger tonight, Miss Emily. You and your hopefully you fare better tonight than your Washington football team did this last weekend.
I will try to do my best and bring the title back on U.S. soil here with my old friend Coach Greg. So,
all right, and so the rules are simple: one trade idea at a time, and one joke at a time. Now you're not judged on the jokes. At least consciously. Who knows?
I was going to say, you're totally judged on the jokes.
I spend more time looking for the dad jokes than I did looking for setups, so I want to get judged on the jokes tonight.
How do you think I won last week? It wasn't the picks, it was the jokes.
All right, and as champ, Greg, you get to decide who goes first.
Oh, I have to defer to the lady.
All right, so, Miss Emily, tell me what you got.
Listen, Mark. Me and you have a difference in opinion with our football teams, but tonight I am trying to win you over. So I'm going straight for the good stuff. So let's start with match.
Ooh, a stock that I have been advocating for years now.
Yes. Now, this one, actually, I have to give a shout out to Joe because Cody and I were on the lounge today. And Joe popped a question in the chat and said, is Mark dating again? Because match was up earlier today. So this one is
Listen, it is not a coincidence that I became single about here and matches went from 115 to 155. I don't think that's a coincidence. Hey, listen, you got to spend money somewhere, right? All right, what you got? Let me, daily chart, I assume?
I got to jump into this here. So Joe popped the question and talked about match.
Yes.
Is there something else? Is there some more to the story we're not hearing here?
No, it's one of our students. He was in the lounge today, and we were analyzing some stocks, and he asked if Mark was dating again. Because, well, earlier during the day it had gotten to that high, so we were looking at it during the lounge, and we kind of chuckled at that, Cody and I, and we thought, okay, this would be a great one to start off with.
Nobody's exchanging any rings or anything, then, you know.
All right. You got to convince me how to swipe right here, Emily. Convince me how to swipe right on match here.
All right. So on match, if we're looking at this, it did hit a high today, and I'm looking to see if we can get a break. We did attempt, and we almost had it today, but it did retrace back today. But I'm looking if we can get a high above today's high. If we can get a trigger above today's high tomorrow, I'm looking for a directional play here. Now, we do have earnings, and this is going to be the caveat for pretty much everything that we put out today is that we have earnings. So keep an eye for those earnings. But we can do a quick bull call on match if you're up for it. Trigger above today's high, stop loss, and maybe do an ATR on the stop loss, or maybe find an intraday support level there. Can I sign you up for a bull call trade?
So what month? Okay, first of all, so your trigger would be above the day's high, right? So
correct.
Make sure the momentum has come back. Second go around above that. What month are we going to look out at? We got March, I assume, maybe.
I'm looking at we'd look at March, and we'd look to buy we can buy the 160. Sell the 165 or 170 if you want to do 10 or $5 wide. If we do the I'm sorry, I take that back. Yeah, if we do the 160, 165, it's going to cost you $1.95.
Okay, $1.95 on a $5 spread.
Yep. If it reaches, if for this one here, I wouldn't even have a stop loss because it meets my risk tolerance rules here. So I'm willing to take, max loss on this because it fits my rules here. And shooting for a target of, if it's going to hit 160, it's got to get to 165, right? So shooting for about 165.
All right, and so there's a good chance if we do regain those highs and get some momentum again, it's been taking a few weeks off, right? If we look at the last breakout of match, we saw a slow, steady climb above the 9. We saw a slow, steady climb above the 9. So, what was that? About a peak to trough, about a $17 move. So it definitely has room to run. Would you do a $5 spread or a $10 spread here?
It just depends. I could do either or, but if it's something that I'm just looking for a quick pop because of earnings, I would probably just do the $5 spread, get to 165, and call it a day.
All right.
And
solid way to
weekly. If you take a look at the weekly, you'll love it because it's literally right about to break the weekly high too. It's been consolidating on the weekly as well. So if you look at the weekly chart,
it's taken a nice month off, right? Allowed those shorter term moving averages to catch up. There's definitely something here. Waiting for momentum to pick back up, getting above that high is definitely the clear signal there. Listen, a solid entry into the ring, without a doubt. I got to hear a joke though, Emily, before your round is over.
Here's the joke. You ready? Don't laugh.
Okay.
Don't laugh.
That's your joke.
Here's the joke. Do they allow loud laughing in Hawaii or just a aloha?
Not too bad. All right, Mr. Holmes.
All right.
Here before, you know what to do.
That's a tough act to follow.
Make me money.
All right, buddy. I'm gonna do it for you. SFM.
SFM?
Yes, sir.
Sprouts.
Farmers Market Inc.
Nice.
All right, you got a weekly there. Can we go to a daily chart for the start of this? All right, so the part I love about this particular equity here, so it's had its beat down, found support down there around 18.5. If we draw a trend line from the peak there,
from here,
from the peak up, the high there, draw a trend line all the way down and catch that second peak there. Go back and catch that second peak right there, and keep drawing your line. There you go, right there, perfect. So what's happened here, this is what I refer to as a reversal pattern. All right, we got up to a high, it's got its beat down, took its medicine there, tried to rally, failed a little bit, finally just rallied recently. Okay, got above that trend line, gapping down there, heading down there, not gapping down, heading down there, failed after it got through there, pulled back to that exact line again, and is now taking off. So what that tells me, there's a few things working here. First of all, I like the fact that it's setting up that way. It feels, when you see these types of things where they break these upper trend lines or break the lower trend lines, and they come back to test those lines, that becomes a level of support most of the time. We can see that's exactly what happened here. Now we're in a point here where we're right around that 21 mark there. If you get above that there, you've got some room to run. At least 22, probably 23 is in play there. But the one thing that I like most about this is when you see these types of equities and they come down and all the moving averages blend together, what that usually signals is a burst of energy is on its way. When all those moving averages can consolidate together, what that's doing is it's building up energy. And we could see that because this thing's gone sideways, virtually sideways for 2 or 3 weeks now, okay? And so now we've got this opportunity just setting up, starting to show some strength after this last recent retracement there. A conservative entry would be above 21. Like I said, you're definitely getting to 22. I would expect you can probably get to 23 without too much of a problem, just because we're beyond that upper trend line there. Nice low dollar pick. So lots of folks with smaller accounts can buy this stock. It's a stock play at $20. I don't know that you need to go options with this. I actually didn't even look at the options, to be honest with you. I just think this is a nice little stock play here. Kind of a, cup and handle kind of dealy going on there. Like I said, I really like the break above 21 there for a decent, at least a $1 run, possibly $2 run. Easy peasy, buy stop limit order, put your target in, put your stop loss in, and Bob's your uncle.
All right. The only thing you left out there, what about a potential stop loss?
So
Yeah,
stop loss, yeah. So when I get these breakouts of specific levels, I just like to take the ATR and make sure that I'm at least 1 to 1.1 to 1.2 away from the entry price. So whatever your entry price is above here, just take 1.2 or 1.1 times the ATR away from that. That's going to make sure that you're outside of that daily range. Is in my experience, I've been using that for a while. It typically is far enough away that you're not going to get whipsawed out. If you do get whipsawed out, it's because volatility picked up, and it's probably an abnormal condition that we know we might not want to be in, or at least might want to reevaluate the trade anyway. So that's kind of how I play those there. You could find another level of support, below some of those candles if you wanted, or below some moving averages. Like I said, for me, when I get these little breaks here, I just usually take an ATR, a little bit more than an ATR, and just make sure I'm outside of that room. One of my mentors used to say, if there's a dog in a backyard, a mean old dog in a backyard, it's got a 50-foot chain, where do you want to stand? And 51 feet is usually about the closest anybody wants to get to it. So I kind of look at stop losses in the same vein.
Fair enough. Another solid entry. All right, give me a joke there, Greg.
All right, you're gonna love this, Mark. These are all guy who walks into a bar jokes. So
Canadians and bars.
You gotcha. So guy walks into a bar, he sits down, and he looks up at the ceiling, and there's this meat hanging from the ceiling. So the bartender walks over, he says, what's with the meat hanging from the ceiling there? And the bartender says, oh yeah, he says, that's a little contest we have here at the bar. He says, if you can jump up and touch all 3 pieces of meat that are hanging there, you get to drink free for an hour. However, if you jump up and you miss any one of those pieces of meat, then you have to buy drinks for the whole bar for the rest of the night. He said, so do you want to have a shot at it? Do you want to try your luck here? And the guy looks at him and goes, you know what? I think the stakes are just too high.
Fair enough. All right, round 2. Emily, you're up.
Round 2. All right, give me CB.
CB, Chubb?
Oh, CB.
Yep, CB, cow and boy. All right, so CB, I'm looking at this for a breakout. And if we look at the chart here, we can see that it did break out of that level prior and kind of retraced back to that. And now we're looking to high base again at that 157, 158 level here. So I'm looking for confirmation at that breakout there. Now, when I looked at the options in, and once again, earnings is coming up on February 2nd. So there's your little caveat there. If we look at the options chain, it doesn't have weeklies, and there's nothing between February, there's no April or May or April or March. So it leaves me to do nothing other than the Feb. So if I'm going to play the Feb, I'm going to look to do a bull put spread. Now you could do this, the shares, and just trade the shares straight up if you wanted to do that. But I'm going to look for a cash flow play with this one here. So if we look at a bull put, we could sell the 140. And buy the 135, a $5 spread.
We'll
I typically like. Yep.
And buy the, which one?
The 135.
All right. So that 140 is well underneath anything resembling recent support.
Mm-hmm.
All right.
And we buy the 135. We pick up about 37 cents. I like to get at least 25 cents when I'm selling $5 wides, and then I like to get 50 cents when I'm doing $10 wides. So it's within my rule. So 37 cents. We've got that break even right at that old breakout point right there. So we've got enough cushion. And if you guys know me, I like cash flow, I like cushion, and I like the chart. So if I look at the chart, it's high basing, get that confirmation to the upside. I look at the cash flow, it's decent enough, it fits my rule, and I've got enough cushion. So this one fits everything that I'm looking for. And check out the ROI, 37 bucks on 463 buying power is a nice sweet 8%.
All right, so my question is on triggers. Do you wait for a breakout to get a little extra juice here?
Yes, I will wait for the trigger. I want to get that clear confirmation. I don't want to front run this at all. So I'll wait for the confirmation. I'll have an alert if it breaks that high from that pivot, and then I will get in.
That is just a nice, solid, conservative play. So wait for the breakout, get the trigger, target 35 cents, would you say, at a minimum here?
Yeah, once it triggers, maybe you'll get a little bit less cash flow once it triggers, but 37 cents, right now, and a nice sweet 8% ROI.
8%, nice conservative play, right? Finance, whether or not finance goes up, it's in a healthy trend as a general rule. That's a nice, solid, conservative cash flow play there. Hard to argue those kind of rinse and repeat trades out there. All right, give me a joke here, Emily.
All right, another one. Don't laugh. It's not funny. It's not funny. Do not laugh. What's the difference between a camera and a sock?
A camera and a sock?
Uh-huh.
What's the difference?
A camera takes photos. A sock takes 5 toes.
Takes what?
5 toes.
Oh, 5 toes.
Nice.
Right.
You did search for those dad jokes.
I did. I told you I spent more time looking for the dad jokes than I did the breakout. So I want points on the jokes.
All right, Greg, you're up. Round 2.
All right, dug deep for this one. Well, not really. This is for our folks who are not that thrilled with earnings season. I know personally for me, I quite enjoy earnings season because I love neutral type trades that can give us a little bit of juice. But this one here is ETF DIA, the diamonds.
So the Dow itself.
The Dow itself, the one and only. So this here is purely a technical play. If we look at this thing here, this is high basing ascending triangle, no earnings to worry about. We've got a break above this particular, it'll be the break above the 312 level that I like there. Our last high where was 311.98, so you don't get any closer to 312 than that. So like I said, purely technical play here, but the beauty of it is we don't have to worry about earnings. The other part that I really like about this in particular is we don't have a single stock risk. Okay, so when you have the ETFs for the indexes, you've got all those, you've got the Dow 30, you got 30 stocks here. It's going to take a pretty bad earnings on a couple of really big holdings to mess with your trade here. So this one here, like I said, very simple. This one here, a couple of ways to play it. When you start looking at these things, when you start doing your bias, and we talked about this in a pre-show there, if you're looking for a bias here, you got to look at this thing. We're at an all-time high. I believe we're at an all-time high. We're high basing, which is also bullish. Don't have the moving averages on here, but I know they're set up well. So when I start looking at this is something where I could say, you know what, I'm leaning towards that +3 bullish here. So, having said that, if I'm doing a +3 type trade, I'm doing a long call or I'm doing bull calls. I'm getting aggressive with this. I might even do a ratio spread on something like this when it breaks out. For myself and some of the more conservative traders, I think the way to go here would be a bull call spread. I think you're looking for that quick pop. You've got so many different expirations here. I think you want to go out, just to make sure time decay kind of leaves us alone a little bit. February, March, either one is good. I personally like to go at the money with these things. I might even go in the money with this one. With this one here, let's go to the March expirations. Fine. So we go in the money at the 310 strike. Okay, then we can go. Let's try $10 wide. See what it does. See what the cost effective is. So the 320. So the three. We'll do it.
So your cost is going to be about 400 there.
Yeah, about 400. So if that's a little bit too rich for your blood when it comes to trading, then obviously you can drop it back to the 5. But I really like the $10 spread here. I think we get a pretty decent pop once we get above that 312. Very basic trade. Like I said, you're looking for that explosion out of the high base pattern. And like I said, nice and easy. No single stock risk. No earnings to worry about. Just a nice little trade, and it's very aggressively bullish at this point in time.
So you wait a trigger above 312 then? Is that the trigger?
100%. Yeah.
All right. 312, and then
I'll give it a little bit of change too, right? So it depends on how folks do this, but giving yourself even a portion of the ATR, 10% of the ATR above that 312, if you want to be conservative to get in there, I'm good with that too. That's gonna usually get those fake outs out of the way for you too. So.
Yeah, and yeah, I mean, you can see like a scenario, right? That stimulus chatter, earnings come in good, lots of momentum. If you hit that point, I get that trade 100%. All right, let me hear your joke.
All right, all right. Guy walks into a bar owned by M&M. He tells the bartender, he says, "Give me 2 shots of." The bartender says, "Excuse me, you only got 1 shot."
You only got 1 shot. Listen, that's one of my favorite songs of all songs. So I found that hilarious. If you don't know that Eminem song, you're not going to get it, right?
Right.
So you had to have watched 8 Mile. Everybody's watched 8 Mile. I've actually walked that road. I've been living near Detroit. So
yeah, all that joke needs is a little bit of mom spaghetti, right? So, all right, Emily, round 3. 2 rounds left. Round 3. What do you got for me?
All right, round 3. Let's go for a big flyer. Let's go ADSK.
Emily likes some breakouts, doesn't she?
Oh yeah.
I do. I mean that they're so easy to find in this type of market, aren't they? Why make your life more complicated? Just find the easy setups. I don't need to make my life complicated. I've got kids.
All right.
So ADSK, same type of thing. We're looking for a break above that high that we've had. It broke 2 weeks ago? 5? Let's see, 1, 2, 3, 4, 5 candlesticks before we had that breakout. Now we're doing the same thing with consolidating. So you can see the pattern, you can see the behavior of ADSK. Every time it has a breakout, it runs and then consolidates. I don't like the red candle from today, but it's still, high basing at that 321 level. So I'm looking for trigger above 321, that high that we have today. Now this one here, I was kind of playing with a couple of different scenarios, and you guys tell me which one you like. We can go directional and go bull call. And I was looking at the March monthly, the March 19th. And with the March 19th, it's going to be a little bit expensive because this is a high price stock. So we can go bull call and buy the 320 and sell the 340.
So that's going to cost you.
That's $20 wide.
It's $20 wide, and it's going to cost you about what?
It's going to cost you about $723.
About 700 and change for 20.
7 and some change. Or we can do broken wing butterfly, because I think if this thing pops, it's got room to go. It's got room to go, right? There's no overhead resistance. This is the all-time high. If I go back to a weekly, it's never gotten this high. So, and looking at the trend and how it's been doing, I want to leave the top a little bit open-ended. So we can go broken wing butterfly, and we can stick with the March and stick with the 65, because I want to give it time. I don't want to, I'm going to be in this for a while. If we do the broken wing butterfly, we'll buy the 320.
Okay. So you buy the 320.
Uh-huh. We'll sell the 340.
Okay. So that starts off with just a good old-fashioned bull call spread.
Yep. And then we will buy the 350. It reduces our cost a little bit. Comes down to about $4 and about $4.50.
All right,
but
so we buy the 320, sell the 340, and then.
Right. So you're going to buy the 320 and you're going to sell 2 340s.
Oh, sell 2 3. Oh, okay. So we sell 2 340s.
It's a broken wing butterfly. Yep. We're going to buy the 320, sell 2 340s. and then buy 1 350. So it makes it a broken wing butterfly.
And what's my cost on that?
Going to cost you $4.50.
I like that. So
Do you want
what kind of scenario? Go ahead, Greg.
Do you want to show that risk graph? Do you want to put that one in the analyze tab,
if you
Mark?
want, if you want to build that out so they can
Great.
see.
Emily, will you take over the screen and build that for me? And
I
toss?
sure can. Let me know if you guys can see my screen. It's already built out, but I'm going to go back and build it out again.
Yeah,
Can you
I
guys
can
see
see
my
it.
Thinkorswim? Okay.
Yeah, looks good.
So we're looking at the March, and we're going to buy the 320. Actually, I need to cancel that out because I already had one. So we're going to buy the 320. I just hit press the control key, and then I'm going to click on sell the 340s, but I'm going to sell it twice. And then I'm going to buy the 350. And when I do that, it turns it into a debit spread, but it reduces my cost as opposed to going just directional. I'm going directional and do bull call. So I've reduced my cost almost by half. And now if I analyze it, and I'll give you guys the comparisons on both. So here's our broken wing butterfly. If it gets into my sweet spot, again, this is going to be a position trade. So I'm going to be in this for a while. That's why I did the 65. But if it keeps running, and if I go to the chart, we're looking at a weekly, that's the weekly high. And even if we had 2 ATRs, because this is a big mover, so even if I targeted 2 ATRs, it moves about $7.73 a day. So even targeting about 2 ATRs for a profit there, we've got potential to make a little bit of some profit. If it's sitting at 320 and it moves about $7 a day, if we look at the Analyze tab, we've got potential. And this is what I like when I do a broken wing butterfly. I want to see this curve rising up. So it doesn't even have to get into my wing of the butterfly. As long as I keep getting this curvature here, I'm going to profit as long as it keeps going up. So this is why I love to do broken wing butterflies on high price stocks rather than doing a bull call. But I'll leave you guys the choice. Which one do you like?
I like the butterfly better. What about you, Greg?
I thought you'd like the butterfly.
Yeah, I've always liked the butterflies, and with the butterfly as well, you've got adjustment options with it as well. If it starts to get a little bit funky against you, you can start to maneuver it. It's much more forgiving than a bull call is. A bull call is one of those ones where you can still adjust it, but it's just not as easy as a broken wing butterfly. So love that trade. That's a great trade.
That is a.
All right.
I like
Em's bringing her A game.
Oh, I'm not done yet. Here's the joke. Since you went M&M, I'm going to go one on you as well.
Nice.
What concert cost just 45 cents?
Concert just cost 45 cents.
50 cents featuring Nickelback.
Nice. Nice. Hilarious.
Listen, I'm intrigued by that butterfly. I don't do butterflies very often. And if you want to, no, we got a lot of material on butterflies. Coach Gino does butterflies all of the time. And there's so many ways to trade and so many ways to make money. And there's so many ways to mitigate risk. And we teach you that at Tackle Trading. If you are not a member of Tackle Trading, come sign up for a free trial. Go to the store tab, sign up for that free trial, see if our community, if our education, if all of that is for you. It's a very interesting trade. I'm going to be looking at that. Greg, I'll be honest, it was pretty even up until then.
I expected a dogfight here. I wasn't coming in here thinking this was going to be easy. So I've known Em a long time, and I know she always brings her A game. So
I'm it's been a while since I did a butterfly, and so yeah, thank you, Em, for reminding me they existed.
Hey, listen, Millennial Mark, I need to bring you back to, bring you back to reality.
If you don't think I'm going to go run butterflies on some of the crap I trade these days, then
God, that is not the intention of why we're talking about butterflies.
SPAC butterflies. That's got to be a thing, I'm sure.
SPAC butterfly. Oh my gosh! Trademark it now. SPAC butterflies.
I think we're creating even a bigger monster with this.
No, I think they're called sputterflies.
All right, what you got for me, Greg? Round 3.
All right, let's go to Costco. Good old Costco. They're getting some of that stimulus money. You can bet your sweet pippy that's happening. So
I like the theme there, right? Because people. We know that individuals, when they get the stimulus checks, probably going to spend it, right? That's
Oh,
what
yeah.
markets do.
Oh, yeah.
Let's see, who has screen? Do I still have screen share?
I
think
have
to clap.
screen now.
Okay, you have it. Perfect.
All right. So, yeah, I love this trade for a multitude of reasons. First of all, we are stuck in a consolidation between about I think that's 380 and about 360. We've just come down to that 360 level there. Perfect reversal candle in that little hammer candle that we saw there, right? Little doji hammer candle there, reversed up, got the confirmation up to the upside. So now we have a classic retracement coming off a known support level and rising back up. So this is why I like this trade. This is what I call the trifecta. You can do so many things with this trade that I love it for this reason.
Yep.
First of all, it's building out a beautiful W pattern. Okay, so we had a pull back to 360, back up to 380. Now we're back to 360 again. We can see, as we've talked about before, how you can kind of see those patterns developing. I see a nice old W pattern developing here. Now, the beauty of it is we've got about 6-day retracement here. We've got a confirmation the upside. Getting in above the high of that candle there is your entry. There's so many different ways to play this. You could enter now. You could do, long call, bull call, whatever you decide to do here. You could enter on this, like I said, above the high of this day. You could be conservative, and this is what I like about this. You could enter a part position here. Okay, run it from here back up to 380 where we know known resistance is. Run it back up to 380 there. If it breaks out above that, you could add your second leg onto this trade. So you could leg into this thing in a big way, because if it gets beyond 380, the high of that was, I think, I can't really see that number, about 390, something like that.
About 387.
387. So in that ballpark, you've got another potential $10 run here. So love the fact that you can do these two things here. There's yet another part, and this is why this is a trifecta trade for me. Costco is a pretty decent credit spread candidate as well. So if you're looking for direction, you've got that here. If you're looking for classic patterns, retracement patterns, you've got that here. If you're looking for a potential breakout, you've got that here. If you're looking for cash flow, we got that here too. If you look at getting below that 360, getting down to the 345, the 340 bull put spread, you can get 50, or at least today, you could get 55 cents for that for a $5 wide spread. So you're getting better than 10%.
What strike prices was that?
345. This is 30 days out.
Okay,
so it'll be February 12th. Yeah, 345, 340 for about 55 cents. So you're getting better than 10% rate of return.
I love that.
That's on cash money, by the way. If you're using margin, you're gonna get a better rate of return than that. So you've got that spread there, and you've got a boatload of cushion, as Emily said, to seal her line there. You've got a boatload of support between that 340 and the level where it's at now. Plus, you've already got that momentum to the upside. So really, with Costco here, again, we've got kind of a fundamental, sentimental reason to be in here with that stimulus. People are going to the big box stores. I think that's the only stores that are still open. You know what I mean? People are out there spending those stimulus checks. So we got that reason. We've got a beautiful technical setup here, and we've got 3 different ways to play this thing.
Yeah, I love support bounces. I love these trades. These last 2 trades were my favorite trades so far. I mean, I liked them a lot. I like that sprout market and the match theme too. I love both of these last 2 trades. I love that support bounce. And then for that credit spread, I love the fact that you have those rising weekly moving averages, not just 1, but 2, the 20 and the 30 weekly credit spread underneath both of them. We see that when price came down to that 20 weekly, guess what? Bounced off the penny. We saw that recently with Walmart when it came down, bounced off the penny, and then nice, boom, 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 the next coming week. And so I like that high probability play on the credit spread. Love the trade. I love the directional for those. Once again, I love the sentiment behind it. I love the double bounce. Lot to like there. A lot to like there. And I like you said, a lot of different ways to play it. Now, I'm a conservative coward, so I'll probably choose the most conservative way, right? But being a conservative coward's made me money for a long time now. So,
see, that's the beauty of trading. We got something for everybody. You know what I mean? We've got low risk stuff. We've got high probability. We've got aggressive. there's nothing in the realm of trading that can't fit somebody's style. So
No,
that's
I mean,
that's what I love about it.
I like that. I like how it all comes together. All right, hey, listen, this is give me a joke here, Greg.
All right. So a priest and a rabbi walk into a bar. Why didn't the rabbi duck?
A priest and
A priest and a rabbi walk into a bar. Why didn't the rabbi duck?
I like the trade setup better.
I'm running out of bar jokes. What can I say?
I mean, listen, there are jokes outside that don't involve drinking, Hey, listen, this is really tight, picking up steam. Final round, M. Whatever you got out there, you got one round left. This is your last pick. I thought you were going to win there for sure. And I love that Costco setup. That just smells like easy money on that credit spread.
All right, let's go on a sector that is popping. Let's go with TXT. Now, TXT is in the industrial sector. So if you look at this chart and compare it to the industrial and look up XLI,
Okay.
they almost look identical.
Very similar.
Very
I'm almost identical, right?
Almost identical. So if we go back to TXT, it did break out. So if you missed the breakout, here's your second chance to get in again, right? Because it was high basing there for a while, and if it did break out yesterday, had a little bit of a red candle today. So it came right, and I love how it went below the breakout and tested, but still closed above the breakout, even on today's red candle. So that's what I love on breakouts. Even when they do retrace, they don't violate that resistance level.
Ooh, look at that rising 9 weekly there, trying to push it up a notch.
Yeah, absolutely. So I love this for a cash flow trade. So I'm trying to win you over. I'm going to go your favorite naked put.
Okay.
And I'm looking at the February 19th.
Emily's here to win, Greg. She's like, all right, it's close. Mark loves naked puts. I feel like I'm a judge getting bribed here. All right.
Yeah, you are. I apologize, folks. I got to roll, Mark. I'm gonna give you my last pick. It's FedEx. I've got a problem I got to go deal with. Okay, so my condolences that I got
not a problem at all.
No
Greg.
problem, Greg. I got it.
We'll see you next time. Thanks.
Got it.
All right, give me the naked put level.
So the naked put, we're going to sell the 40. Pick up a nice 30 cents on that.
All right. Okay. Now, one of the reasons I like the 40 is you got old breakout level, right? So it's down there. It's below the 20 weekly. What month am I going out to?
We're going, let's see, what month am I looking at? We're going Feb 19.
All right. So I could get maybe 30 cents for that.
30 cents for that, and the buying power will be about $400. So that's a sweet 7.5% ROI.
Yeah, I mean, there's so many things I like about that from a cash flow perspective. I also like a breakout here of the 200 weekly a lot. Like if you can get some steam, this is something you see all the time. Is that you get some steam, you take some time off, right? Things can't run 1,000,000% every month, right? It's very healthy to take some time off. If you can just get through that 200 weekly, let me go back a couple years here. You got a little bit of chop, but man, let's go back to a bigger time frame. There's some room to run if you can gather some steam and gather some momentum here. I like it. And the conservative play, right? Once again, I've been a big fan over the last 6 weeks of selling naked puts on some of the stocks that were lagging, that after the Pfizer vaccine back at the old resistance level or back into the old range. So that qualifies that. A company I wouldn't mind owning though. So also.
Exactly. So, yeah. That's why I brought it to you. That's why I know what you like.
All right. Good deal.
Here's,
All right, and I will
here's
take
my dad
Greg's.
joke. Whoa, whoa, whoa! I gotta
Oh,
give you
wait.
the dad joke. Hey,
All right.
hey! I'm trying to win this tonight. All right, here's the good one. Don't laugh. I promise you, you are not going to laugh at this. Why doesn't Jesus like memes?
Why
Because
doesn't
he's a
Jesus like
gift
memes?
from God. GIF, get it? He's a gift from God.
All right, all right. I'm gonna give Greg's final pick. All right.
All right.
Listen, I'm gonna be very, very boring in the last round. I'm gonna go, and I've talked about this a little bit. I love cash flowing on on gold. Fundamentally, love gold. Let's go to a daily chart here. I love. Let me remove. Let me clean up my. Listen. If you're at home watching this, you do not have to have a million lines on your chart to be a good trader. I mean, the more you learn about trading, the more you realize that trading is very, very simple. Here, I'm going to draw a very simple line for you. It's called support. I have been a big fan in this market as a whole, and I have certainly been a big fan in things I love in selling those naked puts right above support. And I've talked about this a little bit above, but I like the aggressive play on gold, especially if you do not have ownership. Now, gold's had some weakness the last few days. For a long-term investor, and if you don't have exposure to gold in some form or another, I mean, you don't get many good opportunities with clear support levels. I like gold sitting at, and this is gold itself, the gold futures. I love gold sitting at the 200-day moving average. As my brother Matt says, if you can't buy at the 200-day moving average, when can you buy? I love the cash flow. And so I know myself, I have a 23 naked put I sold expiring in a couple days on GOLD. I'm going, if that expires or puts in the money, I'm going to, if that expires, I'm going to take a new one. And so I would go out to, and you could do all kinds of stuff, right?
Yep.
I have weekly options, so I could go for something a little shorter term, go out 2 weeks, get about 45 bucks. I can go out to the monthlies on February, pick about 85 bucks. And if I put those shares, then I just immediately start selling calls, cash flowing it. And cash flow is surprisingly simple. You know, there are so many cash flow strategies that you do not have to have been trading for years and years and years to do. But I like the GOLD naked put. It's especially because it's on a gold trading instrument. So that's my play. But listen, I can't beat the high probability plays in Chubb, in the butterfly and Autodesk. The Textron naked put is just one I'll do automatically, pick up some lunch money there. And then that breakout on match has some legs. I would wait for confirmation, but Emily, you are the winner tonight on. So congratulations. It would feel dirty me giving myself the victory, now that I'm above it.
Listen, now that Greg's not here, I can actually tell you the secret sauce. I had to call some few friends of mine today to get some dad jokes. So Tyler, I know, was very upset for losing last week. So I went to him and got some dad jokes from Tyler.
All right. And so listen, it is my obligation to give you a dad joke. I forgot that part of the thing. Here's my joke.
All right.
Why can't a nose be 12 inches long?
Why?
Because then it would be a foot. So there's my dad joke.
Good one.
There's my dad joke for the evening. All right, Emily, thank you for coming up. Congratulations on your first win here on Trade Masters. Definitely a couple trades that I'm going to do here. And everyone out there, and I hope Greg's okay. We love our community. We love our coaches. We love our members. We love all of you.
Absolutely.
And if you want to see what Trade Masters and tackle trading is all about behind the scenes and all the education we do, learn about credit spreads, learn about butterflies, learn about naked puts, learn about bull call spreads, all of these trading instruments we talk in our technical analysis 101, in our options 101, in all of our classes. We just have a ton of educational material because it is not enough for us to have you make money. We want to give you the skill set where you can do this week after week, month after month, year after year, down the road in your quest for financial freedom. So check out the store tab, sign up for a 15-day free trial, see if our little community is right for you. Everyone have a wonderful, wonderful evening. Emily, once again, thank you. You did much better than your Washington football team.
Thank you. And we've got what happening at 8:30 tonight?
And we have cash flow condors tonight.
There
Tyler
we go.
Craig, about 40 minutes or so. He's going to be teaching the cash flow condors class.
All right.
For members of that part of our sub community, 40 minutes cash flow condors tonight. Everyone,
Bye,
have a good
everybody.
night.